Sure that we are on. There, there is Mr. Mpisi has just joined us. He's obviously had shaking his head. He's had some problems probably logging in, and obviously a work call. So for the students that I have been speaking with now, there is the link to the attendance register. Also, if you are not part of the Western Cape region portal site, or if you can't see the sites or you can't access anything, please remember you need to join with the Western Cape region. If you're from a different region, you will still need to join with us in order to see the resources such as the recordings, as well as the resources that Mr. Mpisi will be providing you during the class. I will also add those links in. And then as you go through your session, you might see some chats popping in from other students. You guys are more than welcome to, and we welcome it that you communicate with each other in the chat. If you need to speak to Mr. Mpisi because he is working on different screens, please unmute, ask your question, and he will carry on with the answer. So with that, I'm not going to taking too much of your time because we are a little bit delayed. And welcome to the session, and I really hope you enjoy it. Mr. Mpisi, all over to you.
Thank you very much, Bronwyn, for that introduction. And thank you for recording the session for us as well. Welcome to everyone. Apologies for that. It's the technical errors that one struggles with. But thank you very much, Bronwyn. Sorry, man, I missed part of your introduction. Just to follow on my side today, are we expecting any support from the lecturers?
Zukisani, no, nobody has indicated that they will be. Oh, I see Frank is in. Sorry, I do apologize. Your academic, Mr. Frank Montgomery. I don't know if he wants to switch on his video and we put him in the spot, but Frank, you can just give a quick hello to the students that are in the session. I'm sure they will appreciate to see who you are or just hear your voice.
Hi everyone. Yes, thanks Bronwyn. My name is Frank Montgomery. So I'm the MRL for this module. And I thought I'll just quickly pop in today to give the support. I think it's a great initiative, very important during these difficult times that we do support all our students. So just hope that you will enjoy the session. And Mr. Mpisi, please go ahead and entertain our students for us. We really appreciate it.
Thank you very much, Dese. I appreciate that support as well. But welcome everyone. As introduced, I am the tutor for this module. I will be supporting you for the rest of the semester with very limited hours. So it helps me as well when you highlight areas of struggle, especially in the first tutorial. I know that you might have not gone through every learning units, but it helps just to gauge on the strengths and the weaknesses that I have of my students, and to be able to know how to pace myself as well throughout the tutorials. So this is what I'm going to do. I am going to do a quick presentation, including just on ground rules. Then afterwards, we're just going to have some little interaction that we are going to have. Basically, I'm just going to do a quick intro. So this is what Bronwyn has already covered, but very important during the sessions. Please make sure that you mark yourself on the attendance. Please, for any study support related queries, administration related, you can go through CityNTAT at unisa.ac.za. As we proceed with today's coverage of tutorial, we will also touch on the feedback form, which you will need to provide an evaluation of how you found this tutorial, and also any improvements that you are suggesting to UNISA as well as to myself, in order to make sure that this constructive support is is reaching its desired goal of providing the perfect support for students. So just as the beginning, we have the following as the support that is at your disposal. You've got tutorial letter 101, you've got tutorial letter 102, and then you've got tutorial letter 103. And of course, you've got the study guide itself, which has got all the learning units that we are covering throughout the year. And then you've got the prescribed textbook for the module. So what I'm going to do is I'm quickly going to latch on the presentation that was done by the FACET lecturer on the first FACET lecture, which are also very important support that is availed by UNISA as well. So as you know, the UNISA extended dates for the assignments. It's the 4th of September and the 25th of September. So you might have received this notification, but please receive it from me. It's very important that you do these assignments whilst you still have time. Once there is no technical issues on my UNISA, there is no issues at all in terms of traffic on the system. And very important for assignment 1, it gives you a full entry into the exam. So it's a very important assignment you do not want to miss in terms of the submission. The exam date that I have there is just a provisional exam date for the 19th of October. So my planning is considering this date to ensure that by this date, at least I would have covered almost every learning unit. So the goal today is to cover learning unit 1 and learning unit 2, but most importantly, it is as well as to prepare you for the presentation of financial statements, which is International Accounting Standard 1, which we will be covering on the next tutorial. And as we move on, the most important things that we need to establish in terms of financial accounting is the structure of your answers, the structure of your statements, the structure of your answer. So what you will find as we are discussing along when we are doing the introduction to company financial statements, which is learning unit 1, we are going to touch on the important aspects that you need to comply with. Now, once we trigger the word compliance, then it means there is a set of rules. There is a set of procedures that you need to comply with when you are providing your answer. Now, those set of rules it is your IFRS, your International Financial Reporting Standards, which provides you the structure of how to prepare financial reporting for your users. So we'll speak about what is financial reporting. So most importantly as well, the IFRS will also teach you new terminology that you should get yourself acquainted to. So one of the things that we'll also touch on is the exam technique, which is very important. So what I'm going to do is I'm going to just run through quickly the presentation that was done for the FACET, and I'm going to, of course, be thinking of those students that would have had a chance of seeing the presentation. So I am going to quickly look at the presentation. It was presented by one of the lecturers. It's also provided to you via additional resources. So I just want to quickly run through all this administration quickly. What's very important is you take note of the different support systems that UNISA is providing. So you've got myself appointed as a face-to-face tutor, and given the COVID pandemic, the Western Cape office has opted to for us to present these classes electronically. Then you've got your e-tutorials, where your e-tutors, you can also identify them on your sites on my UNISA. And then you've got the FACET classes, which are presented by the lecturers. Please be on the lookout for the emails. It's very important. There's a live event for Q&A, questions and answers, where you can also get the support. So I'm just going to pass this. Please note, this were the initial assignment due dates. What I provided was the extended dates, but please try to adhere to these, because the extended dates were only provided to the students who registered late. Now, the study guide for this module is what we are going to be covering today. Most importantly as well, it is for you to know that there is a textbook which is prescribed material for this course, the 8th edition of Introduction to Financial Reporting Standards, Introduction to IFRS. Very important that you have that book, because most of the principles and examples are given more in the textbook than on your study guide. Now, one thing important about an accounting student is that you must practice, 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 practice. Now, your examination date is planned to be an online assessment. So one of the things that I just want to touch on in supporting you, it is to look at how we can plan for the home advantage. So the home advantage is you writing your exams in your comfortable space. What is it that you have at your disposal that will be able to help you to quickly finish the exam on the day? So now the overview in terms of the tutorial letters. 101 has got your assignments and the administrative issues, which highlights how you can find information around this course, including the prescribed textbook. Tutorial letter 102 contains additional questions, which helps you for year-end preparation. Tutorial letter 103 has got conceptual framework, which is what we are going to be discussing as well today. And then you've got your study guide prescribed, so everything is as I have covered it. So one of the things that were highlighted here for what we are going to be covering in the next tutorial letter is Learning Unit 3, which we will cover on, and we will reference to what was covered in terms of this presentation. So I'm going to pass here, and then we are going to quickly have a very important chart, because I need to quickly have a quick interaction. I just want to quickly look at how many of us are here. Now, I believe it's very good. We can be able to do what I intend for us to do. So quickly, I just want to have a quick interaction sessions with you. So I want you to highlight for me, because this is what helps me to plan all future classes, to be able to gauge the knowledge gaps, the exam weaknesses, the study technique weaknesses that my students may have. So what I'm going to ask is, I'm demonstrating it on my side. You've got this function of being able to raise your hand. So what I want to quickly take is for you to quickly tell me what is it that you struggle with when it comes to accounting. So what is it that you struggle with when it comes to accounting? So I quickly want to make that part quickly interactable for you just to quickly tell me what is it on your side that you struggle with when it comes to accounting. Anyone who is willing to quickly break the ice? Otherwise, I am going to quickly just look for someone that I'm just, yes, there we have someone who is Netherlands. That's what I have on my side.
Sure.
Quickly,
That is me, yes.
on your side.
Sure. So for me, I mean, I've worked through the study, not the study guide specifically, but I've done chapter 1 and 2. And I think the most difficult one for me to understand right now is the shares. You know, differentiate between the ordinary shares, cumulative shares, and non-cumulative shares. So that's what I struggle with. It's the second time I'm doing this, and I get stuck there every time.
It's the second time that you are repeating the module?
Yes, I've done it, I think 2 years ago, and then I didn't pass, and I left it, and I thought I'll come back to it. So yes.
All right. Thank you very much for that. Do we have a second person? You can lower your hand. Second person. All right. I'll quickly select someone. NF Mbuto. All right. Zandile, you can come through. Zandile, just unmute yourself.
Oh, I'm talking about the list. I would like you to explain to me about the list.
About?
List.
About leases.
Yes.
Are you repeating this module as well?
Yes.
All right. Yes, please come more. This is very important because if we do not diagnose our issues, on my side, my presentations are not going to touch on the important aspects that you are needing on your side. Who do we have next? Zandila, please unmute yourself again. Pamela, you want to talk to us? Sebastian Koopman.
Hi, tutor. Hi, everybody.
Yes, hello.
Yes, I have actually not yet experienced any difficulties, but I'm just so late with registration that my challenge is to have the available time to manage all my models, and especially this one. So I'm so happy that I can join this class and grasp anything that you share right now.
All right, lovely. Thanks very much for that.
Thanks.
Tendai.
What I've considering what I've gone through, I think what has been a bit more challenging now was the from learning unit 5 and 6. I think that's the PPE and the investment properties. That seems like it really needs a little bit of, there's a little bit of more work that really needs to be put in those two learning units.
Do you specifically know what you can identify in those units that you struggle with?
For PPE, yes, but mostly I think the workings of the dates, like knowing the dates, because remember sometimes, I think it's mainly that's where I'm still struggling in on, like, let's say they can bring out the trial balance is at a later date, but then the information maybe that we have is already, so I think that's where my confusion is still, like looking at the dates and working with my information on those dates to add it into my whatever that I'll be compiling in my PPE.
All right, noted, Tandai. Unati Ludaka. Anyone, Zuko? Arthur, David? All right. So what I would have loved, it is to list most of the problems that we are struggling with more. In the previous year, what happened was I had the number of struggles that the students provided in class, and I could be able, when I was presenting, to make sure that each unit, the pace that I provide the tutorial was helpful and also organized in a manner of dealing with the areas of concern as raised by the student. But nevertheless, that's fine. We will pass on. And we will quickly look at the introduction. We will quickly look at the introduction to company financial statements, because these are the most important things that we cannot discount. One of the things that you will find about me as well is I try so much not to recreate slides, given so much information that you have at your disposals. So what I will mostly do in the tutorial starting from next week, we'll be attempting a question that was presented in 2016. The reason why I love that question specifically, it is to address the International Accounting Standard 1, which is the presentation of annual financial statements. But let us proceed and just cover Learning Unit 1, and then we will move on to Tutorial Letter 103, where we are going to be covering Learning Unit 2, which is the framework of the framework. And when we are covering the framework, one of the important things that I have to note is the changes. If you're one of the students who dropped before or who did accounting in the past years, I want you to be able to note the changes as well, that the framework was basically introduced the previous year, and it's been applicable from IFRA's side. And if you know the initial framework that was there, there has been a huge change coming to now. So if we may begin today, so the purpose of this module, it is for you to be able to produce, present, compile financial statements of a company. So that's the main objective. It's for you to be able to compile, write down, and in a presentable format, the financial statements of a company. Now, as we're touching on that, the most important aspect now becomes you need to know how the format should be and how the layout of the financial statements should be. Now, very important thing about FAC2601 as well is every question that you are going to be answering now has got an important layer that comes with it. So if you are required to do a statement of financial position, the question will move on and it will say, please present the statement of financial position, and it must comply with International Financial Reporting Standard. So it becomes important that you make sure that there is that compliance that you adhere to. So what is International Financial Reporting Standard? It is a standard that provides a set of procedures on how to recognize, measure, and report the transactions of a company in the financial statements. So International Financial Reporting Standard is a set of accounting standards which are adopted internationally. It helps companies to be able to record transactions, measure, and also to report in the financial statements. So in terms of the company itself, and this theory is very important because it helps you to build up on a couple of learning units that we are going to touch base on as we go along. So one of them is financial instruments. When we are doing financial instruments, it helps you to first know the company background. And of course, another one which is important is the presentation of the financial statements, and as well as the framework which we are going to be covering, which is called conceptual framework. So in terms of the company background, a company is incorporated in terms of the Companies Act, and it's provided that the reference of the Companies Act, that it's 71 of 2008. A company, it's a legal person on its own, which means it can be sued, it can operate on its own, it can take debts, it can register titles. So if you have a company, it can actually buy property, sell property. So a company is a legal person. So those are the examples that are provided here of, but important thing, when the company is incorporated, there is a notice of incorporation and a memorandum of incorporation. Now, a memorandum of incorporation, it's a document that provides how the governance of the company is going to be. So the memorandum of the company provides information about how the shareholders are going to be formed in the company and what type of shares can be issued by the company. So one of the students said one of the struggles is understanding the issue of shares. So the issue of shares emanates from a document called Memorandum of Incorporation. So the Memorandum of Incorporation spells out how the company is going to be governed. So the company is then, after the creation of this document, is then registered in South Africa. It is either registered as a profit company or as a non-profit company. So there are other elements in terms of the registration, like any registration that has got transferring of rights. It needs to pass through legal. So for example, if you're buying a house, you need to approach legal attorneys who are conveyancers. So similarly, with the company itself, in terms of its information, you need all the registration documents, the legal costs to be covered in terms of incorporating the company. Sorry, I just saw a notification where the lecturer is just saying they just have another matter to attend. Thanks so much for joining us. But let me proceed. So the important thing about a profit company and a non-profit company is the fact that a profit company is created in order to make profit. And the non-profit company, despite that it can make profit, but its main aim is to focus on the service delivery issues. So you look at your NGOs and you look at your companies, those are the two different things. So the most important thing is with your companies, you also have public companies and you also have private companies. So your public companies ends with the word limited. So we sometimes summarize this word and we say limit LTD. So this is what you will always find when you are looking at your at the companies that are provided in the exam or in this tutorial letter is that we will use this abbreviation LTD, which means limited, whereas private companies will end with proprietary limited. So proprietary as well will be in an abbreviation. It will always be in brackets, PTY, and then it will be LTD. So it will be in this format, PTY LTD. So this would be a private company, and this would be your public company. So for a public company, the minimum number of directors or shareholders is 3, and the minimum number of directors, shareholders for a private company is 1. So minimum means what is the accepted number of shareholders. So in public company, it's 3. In private company, it can be 1 person. So public companies may be listed on the Johannesburg Securities Exchange, which promotes the marketability of the shares. So very important for you to take note of this, because similar information has got a synergy to help you to understand other modules such as your management accounting. So public companies, they can be listed on the JSE because it promotes the marketability of shares as well as helping with the valuation of the shares. So most companies listed on the JSE have got better shares in terms of better value in terms of their shares than private companies. So it's a whole issue of valuation again. So I'm not going to dwell much on the history of the Companies Act, but there is a Companies Act that is enacted in South Africa, which all companies adhere to. So it has got rules as well as to, and in any way, if you are found non-compliant with the Companies Act, there may be other processes that may be triggered. For example, if you are doing auditing, you may have a reportable irregularity because of a non-compliance to a Companies Act, and there are different clauses that are applicable to a Companies Act. So annual financial statements in terms of the Companies Act, companies are obliged to draw up annual financial statements. So what is it that you use to draw up financial statements? You use your ledger accounts, your cash receipts, payment journals, which are pulled through to a trial balance, which provides you just balances. And from the balances that you have to draw up annual financial statements. So which means you have to look at whether you have got additional information that warrants adjustments before you can actually build up annual financial statements. So we will touch on this as well when we are covering the framework as to what is the set of financial statements, as well as covering issues such as what are the elements of the financial statements and who are the users of the financial statements. So that we are going to cover when we are doing the conceptual framework, which is on tutorial letter 103. Now, very important for us to focus on is the share transactions. So in terms of the share transactions, one important thing it is to understand how share transactions are structured and how they come along. So when a memorandum of incorporation is compiled and developed by a company, it provides the classification of shares that the company can issue and that the company can hold. So it provides the total authorized number of shares, and then the issued shares would be what is purchased or what is acquired by the people that you would call the shareholders. So once the company is formed, you've got people who form the company, they contribute their capital, and their capital is known as share capital. Now, that share capital must speak to the classification of the shares that you are purchasing. So there is different types of shares. So there's example that is provided here, which we will cover shortly, but there's different classification of shares. We will touch quickly on those, but as an example, example 1 provides you that a company, in terms of the memorandum of incorporation, has got an authorized share capital of 100,000 ordinary shares. So the 100,000 ordinary shares are valued at 100,000. So what does this mean? So this means that your 100,000 shares, your 100,000 authorized shares, we need to find how much is each share. So from doing this equation of saying 100,000 divided by 100,000 shares, we find that the value of the shares is 1 rand per share. So authorized share capital, in terms of the memorandum of incorporation, provides to you that you've got 100,000 authorized shares, which means a company cannot issue more than it is authorized on the memorandum of incorporation. And the second information that is provided to you is the value of these 100,000 shares is also 100,000 rands. Now, this simply means each share is equal to 1 rand. Now, the next thing that you are told is the issued share capital. So the issued share capital is issued to people who it's issued to people who provided capital. So you've got individuals who would have contributed their capital to be shareholders. So then they purchasing 80,000 shares from the company, and the company, because remember, when you look at yourself, you must always look at yourself from a company perspective. So you are the representative of the company. So you have issued 80,000 ordinary shares. So the 80,000 ordinary shares, in terms of the valuation, would be 80,000 shares multiplied by 1 rand per share, which is per the memorandum of incorporation, which provides you 80,000 shares. So that is the first example. The second example just shows you the journal entries that are involved in terms of acquiring shares in a company. So one of them is you are told APC Limited has got 1,000 ordinary shares at 1 rand 80 cents per share. So which means that if this is what was issued, it means that the company would have in the bank account received 1,800 and would have issued share capital of 1,800. Now, I want to help you to build up where we are going. Now, where we are going is when you are doing your journal entries, you will need to know where is this share capital going. So this share capital is going to the statement of changes in equity. So it's a statement of changes in equity. Now I'm addressing some of the things that we will also address when we are doing leases and when we are doing other learning units as well. When you are compiling a journal entry, important thing about a journal entry is you need to know the date of your journal entry. The important thing as well, the important thing as well is to know which statements are affected by your items that you have posted on your journal entries. So bank, what does bank, where are you going to take this value of this bank? You are going to take it to a statement of financial position. And remember, in terms of IFRS, we no longer have, in terms of the terminology, we don't have the term called bank. There is no such a term. So bank in terms of IFRS is called cash and cash equivalent. Now, this is what now I want you to understand in terms of IFRS. You are now developing new terminology. So when you are downloading your trial balance or provided information, this is called bank. But when you are posting it to a statement of financial position, it's now called cash and cash equivalent, which becomes a current assets. But we're going to deal with more nitty-gritties when we are dealing with the presentation of the financial statement. Right. The types of shares that we have, it's different types of shares. Firstly, we have ordinary shares. So ordinary shares are considered to be equity shareholders. So this is the ordinary owners of the company. So it's related to the owners of the company. So it represents the equity ownership in a company. The ordinary shareholders, they've got full voting rights at annual general meetings, and they've got as well right to returns. What is the right to returns? It is your dividends. So with the investment that they have made in a company by providing capital and also managing the company in terms of the governance, they also receive dividends. So we'll also speak about dividends when we are doing the presentation of financial statements. So that is ordinary shareholders, and these shareholders, they acquire share capital, which is equity for the shareholders, and in terms of their dividends payment, it is not fixed. It is based on a decision that is made at annual general meetings of how much is provisioned and how much of available profits are there in order to pay out dividends to the ordinary shareholders. Then you've got a preference share. Now, a preference share is another share other than ordinary share. It is it has got two components in it. One, it has got a debt part, and then it has got an equity characteristic. Now, the debt part, if the preference share is triggered as a debt in terms of your financial instruments, which we are going to cover at a later stage, it means that your preference shareholders are going to receive a fixed dividend. So we're going to have an example that shows you how a preference is classified as a debt, and what makes a preference to be classified as well as equity. So an important thing that I want you to note at this stage is, in terms of payments of dividends, preference shareholders, they've got a preference, as the word suggests. They are considered first when you are paying out dividends, when you are distributing your profits. So even if a company was to be liquidated, like it's happening now during COVID-19 pandemic, that companies are shutting down, your preference shareholders would be the first shareholders would be entitled to the shares in the to the dividends in the company. So they are the first to have a right in claiming their debt first in the company. Then within preference shares, you've got different types of preference shares. You've got cumulative preference share, you've got non-cumulative preference share, and then you've got other kinds of preference shares, which is redeemable and non-redeemable preference shares. So we're going to just touch on them quickly. Cumulative preference share means if it happens that you do not pay a dividend annually because of either cash availability in a company, the cumulative preference shares are structured in a manner that that dividend will build up, will be retained up until it is paid. So it will, what it means by it is retained, it becomes a liability to a company. So once you must pay annually preference dividends and you do not have cash, then it means that you must take up in your financial statements a dividend. So that's why we are talking about these things, because once we go over to other learning units and we integrate, this is what you need to know in terms of the background, that a cumulative preference shareholder has got a right that if the dividend is not paid, it is retained as a liability to a company. A redeemable preference shares, they are redeemable at a specific date that is provided, or there will be an option that says the preference share will be redeemable at a certain time in the future. So one person may be asking, why does a company even bother to issue a preference share? So how it comes about that a company issues a preference share is sometimes a company has got a dire need for cash injection. So one of the ways to raise cash, it is to issue shares to the public at a better value, at a better fair value, and when they are purchased, those shareholders, they bring injection to you, and in the meantime you structure a contract of how you can pay them a preference dividend up until you are able to pay the capital portion which they have used in order to pay your preference shares. Now, in terms of the preference shares, they are also convertible preference shares and participating preference shares, as well as redeemable and non-redeemable preference shares. So in terms of this module, we are informed convertible preference shares, participating preference shares are not part of this module, which means the two important ones that you must please look at, which are important, and I really need you to highlight them in your other side of your study guide. It is, you must highlight cumulative preference shares, redeemable preference shares. So those are the most important two that you need to know. So non-redeemable, redeemable, and cumulative preference shares. So we go on. Then one of the important things that we are going to learn about as well, it is the issue of capitalization of shares. So you are told that a company, when it retains more profits in its reserves, it sometimes provides an opportunity for shareholders to increase their shareholding in terms of the number of shares that are held in a company. So it is also considered as a bonus issue for the shareholders. So it is just for them to be provided a chance to increase the existing shares that they have, which means that they have a right. Capitalization means they have a right, they are given a right to convert the retained profits, which are called reserves of a company, into share capital in their names. So that's what happens. So you also provided in terms of the books what happens when the capitalization issue occurs. You debit retained earnings, which is your reserve, where you've got retained profits, and then you credit your share capital account, which is increasing. So an example provided here is the following balances are taken in the books of XYZ Limited on 31 December 19.0. The issued ordinary shares, it's R1 at 150,000. The retained earnings is 160,000. So you are informed that on 1 January 20.1, please see that the year end is 31st December 19.0. The balances were taken from the books of XYZ. The issued share capital is 150,000. The retained earnings is 160,000. And then you are informed that on the 1st of January 19.1, the directors decided to make a capitalization issue at R1 of 1 share for every 3 shares previously issued, with a minimum effect on distributable reserves. So I want us to attempt this question. So what we must do now on our side, it is journal entries. Now remember, if you are asked to do journal entries, we are now working on the structure of the financial statements. So I need just to make this big so that it becomes big on your side. Is here you will have a debit and here you will have a credit. And below here you need to show that you are using rands as your currency. It's something that we'll cover as well when we are doing the next tutorial session. It's something that we are going to cover. So we are asked to do journal entry to account for the capitalization. And I want to show you how it's done. So always in accounting, we never have an answer direct to the required. We always have to go and do what you call calculations. So we always reference our calculations, because what we want to determine in terms of our calculations is, which is very important, it is what is it that we want to achieve. So what is it that we want to achieve is we want to calculate how much was issued in terms of the ordinary share capital. So this is what we want to know. So this is what we are informed, that on the 1st of January, directors decided to make a capitalization issue at R1 of 1 share for every 3 shares previously issued, with a minimum effect on distributable reserves. Now, one thing that you are informed here is you've got an issued, so I'm giving you a formula. You've got issued shares, which are 100,000. We just need to make this quickly. You will see the reason why I seem to be a bit slow in my pace is because I want you to get the basics correct when we are now going to start working on the financial statements themselves. So this is the share capital of 100,000 that you are given. Now, what you are told is that the directors decided to make capitalization issue of 1 share for every 3 shares previously held. So this means you have got a formula of 1 divided by 3. Now here we need to have a bit of a formula. So what this simply means is if you were holding 100,000 shares, this simply means that out of your shares that you were holding, for every one share you were holding, every 100,000 shares that you were holding, sorry, you were not holding 100,000 shares. You were holding was 150,000. Sorry about that. Issued was 150,000. So for every 150,000 shares, you are capitalizing 50,000 shares to the shareholders. What does this mean? It means you are giving your shareholders a bonus on 50,000 shares amongst themselves. Now, in terms of this 50,000 that you are providing to your shareholders, you need now to multiply this 50,000 as well by R1. So which means in your books, you are going to credit retained earnings, the statement of changes item, and you are going to, debit retained earnings, and then you are going to credit ordinary share capital, and the value, it's going to be 50,000 shares that we have calculated below times the value of the shares, which is R1. Sorry, I just made a, which is R1. Sorry, I must not make this a formula. Shares multiplied by R1. So this becomes the 50,000. And this becomes the 50,000. So your journal entry says then capitalization issue of 1 share every 3 shares held. So very important, your journal narration tells you the story of what exactly happened. So let's quickly move on. Similarly, you've got rights issues and options. So rights issues and options are also looking at offering of new shares to the existing shareholders, where you give them an option depending on how the market indicators look like. So another important part is the underwriting of share issues. So the underwriting of share issues, it's about hiring a company that that you will be paying a commission, and they will be advertising shares on your behalf. And should those shares not be purchased by the public, they will be taken up by the underwriter. So the underwriter provides the guarantee that if the shares are not taken up by the public, they will themselves take up the shares. And in essence, there is a commission that will be payable to them. So you must now raise a commission as a payable initially, and when the shares have been taken up by the public, and whether there is remaining shares that are remaining that are going to be taken up by the underwriter, you have to take those shares and allocate them to the underwriter and immediately pay the underwriter the commission. So dividends, we will cover them when we are covering Learning Unit 3 as well in terms of their payment. So we'll cover dividends from ordinary shareholders, dividends from preference shareholders. So the next thing that we are covering next is then going to be your tutorial letter 103. So I quickly want to go to tutorial letter 103. quickly have to go to my UNISA to quickly get this tutorial so that we can be able to quickly cover 103. But 103, it's about the conceptual framework of accounting. So it's developed as well to provide. So what you have in your study guides, I forgot to say, please do not look at what you have in your study guide. That learning unit has been revised, the conceptual framework has been revised. So there is a specific tutorial letter which covers the conceptual framework. Official study material, I will have it open just quickly. But the conceptual framework is covering 8 chapters. So we are just going to quickly cover these 8 chapters for today. And then next week, I'm also going to give you I'm going to be providing to you the questions that we are going to be covering for the next class, which will form part of International Accounting Standard 1. The conceptual framework has got 8 chapters. It starts from the objective and it ends with the concepts of capital and capital maintenance. So you'll also understand that theory is I'm covering it because with the multiple choice that you have in the exam, it's a percentage that you really need sometimes to be able to pass. So for example, I also love to always demonstrate things that I am saying in class so that we understand. So this is more or less sometimes how your setup of exams is. But the very important aspect about the exam is there is that question 1 which covers the multiple choice, which is always 10 marks. And that 10 marks is sometimes what you need on your side to be able to make it to a 50%. So that's why it's important that you follow as we are covering this theory. But very important for me as well, please make sure that as we are going through with the lecture, please make sure that you complete the attendance register. There is a link provided there for the attendance register, and at a later time we will have a feedback form that will be provided. So the conceptual framework is not an accounting standard. It is a guide in terms of the elements of the financial statements, in terms of the objective of the financial statement, the recognition principle, the measurement, the presentation, and the disclosure. So international accounting standards in terms of IFRS have got different accounting standards relative to inventory, relative to PPE, investment property, revenue, financial instruments, and those accounting standards cannot be the conceptual framework. It cannot override those standards, but it forms strong basis in terms of understanding what accounting is about. So first chapter in terms of the conceptual framework provides you the objective of the financial statements. So what is the objective of the financial statements? The objective of the financial statement, it is to be able to provide information to users about the financial information of the company. So financial reporting, you must provide financial information about the reporting entity that is useful and to existing and potential investors, lenders, and other creditors in making decisions relating to buying and selling, holding of equity and debt instrument, providing and settling into loans, exercising rights to vote on, and also to make decisions as to the prospects for the future net inflow of the company, management stewards of the entity's economic resources. So what does the stewardship mean? How is management managing the wealth of the company? So what is the behavior of management? What are the ethics of your management? So that is your management stewardship that you look at in order to look at financial reporting. So what is the objective of financial reporting? It is to provide financial information about the reporting entity that is useful to the existing and potential investors, lenders, and other creditors in making decisions relating to providing resources to the company. So before the objective of reporting, it was to provide financial information to a wide range of users. So it has been confined now to be smaller. So it is to provide financial information about the reporting entity that is useful to existing and potential investors and lenders and other creditors. So this is this part. And then you are told what are the decisions that must be taken and what is the kind of resources that they can provide. So the users of financial reports are creditors, lenders, potential investors, and you are told there that financial reports are based on estimates, judgment, and models rather than depictions. So the conceptual framework establishes the concepts that underlie those estimates and judgments. So the conceptual framework's vision of ideal financial reporting is unlikely to be achieved in full, but at least it is there to ensure that when a person reads financial information, financial statements, they are able to understand them at a glance. So chapter 2 looks at what kind of qualitative characteristics makes the financial reporting to be useful. So these are highlighted. It's two of them. It's relevance and its faithful presentation. So relevance is in making sure that the information is relevant. It can make a difference. It is capable to make a difference to the decisions made by the users. Faithful representation means information must be neutral, it must be complete, it must be free from error. So very important fundamental qualitative characteristics, it is relevance and faithful presentation. Now the ones that are enhancing the qualitative characteristics, it's the four of them. One, it's comparability. Your financial statements year to year, you must be able to compare them. They must be verifiable. So there must be an auditor who is independent, who is appointed to quality assure that the information credibility that has been presented in the financial statement is indeed verifiable. 3, it's the timeliness of the information. There must be a reporting period that is there, and understandability. Your financial statements must be understandable, so there must be no much complication. So other important elements that are highlighted, of course, it is to look at to make sure that the information is useful, it is to look at the rules of prudence, measurement of uncertainty, and substance over form. So prudency looks at neutrality, whether the information is neutral, looks at whether there is no overstatement and understatement in your assets, liabilities, income, or expenditure. Measurement uncertainty says the information that has been presented, at least there is a way of measuring it in terms of the fair value. Substance over form looks at what kind of elements where you have looked at more of the substance than the legal form of the transaction. So chapter 3 looks at the financial statements of the company. So the reporting entity is the company which you will be compiling financial statements for. So the reporting entity provides the financial statements and reports about assets, liabilities, equity, income, and expenses. So assets, liabilities, equity, and income, and expenses. So therefore, we'll also speak about the sets of financial statements. So the financial statements are prepared on the assumption that the entity will go on for a foreseeable future, and the foreseeable future is looked at for the next 12 months, and as well as when you are assessing the non-current liabilities that you may have. So you also have the definition in terms of your elements of financial statements. Assets being defined as a present economic resource that is controlled by the entity as a result of past events. So we are going to touch on these things as we go along, but this is very important for me so that you understand how everything has evolved over time. So the old definitions of assets that you know are no longer applicable. This is the definitions that are now applicable. So liability, it's a present obligation of the entity to transfer an economic resource as a result of past events. And equity is the residual interest in the assets of the entity after deducting all its equity, all its liabilities. Income, it's also defined. Expenses is also defined. So in selecting the unit of account, rights, obligations, you look at the recognition criteria. So when you are recognizing these assets, liabilities, equity, income, and expenses, you are looking at the next principles, which is your relevance and your faithful presentation. So you're looking at the probability of a flow of economic benefits and existence of uncertainty. And the second one, you look at the faithful presentation in terms of your measurement, recognition, presentation, and disclosure. So when you are derecognizing an asset, it is when you are losing control of an asset. And liabilities, it is when you no longer have a present obligation. So the next chapter 6 deals with the measurements. So these are the measurements that you have to know, because when we are doing PPE, in fact, when we are doing all assets, leases, financial instruments, you must know the current value of measurement basis. So what are those? It is the fair value, the value in use, and the current cost. So these things, these three will be provided as well. For us, we'll be applying them when we are dealing with the numbers. So you are given here more information about relevance when you are accounting for assets or liabilities, and when you are looking at your future cash flows, as well as faithful presentation. presentation and disclosure. When you are compiling a statement of profit or loss, one of the important things is you need to know how to disclose on the statement, how to present your profit your income and expenditure. Your income and your expenditure, and how you should present it in terms of International Accounting Standard 1, which is presentation of financial statements. So we're going to touch on that. Other comprehensive income as well. What are the items that are involved on other comprehensive income? So it is your things such as your revaluation surplus, your fair value adjustments on financial instruments which are measured through other comprehensive income. So you also are looking at Chapter 8, which deals with the concept of capital and capital maintenance, which just provides you that capital is equal to the net assets, which is the equity of an entity. And the fiscal concept of capital looks at the production capacity, which looks at how the company operations are looking. So the two different concepts of capital, which is one, your fiscal concept and your financial concept. So that is basically a summary of Learning Unit 1 and 2. So as I said, I am covering this theory because to me, it is very important that you understand these basics so that you are able to follow everything that we are going to be doing. So the presentation in terms of annual financial statements provides you the set of financial statements, which are statement of financial position, profit or loss and other comprehensive income, changes in equity, statement of cash flows, accounting policies, and explanatory notes. And you are informed in terms of this syllabus. We are going to concentrate more on the other statements other than the statement of cash flows. And of course, the notes as well. We're not going to look at that much. So those are the things that are highlighted in terms of this. Now, what I want you to look at every time that you are reading this chapter, I want you to look at the fact that there is always lecturer's comment in each of them. So the lecturer's comment will inform you about financial instruments, which will be touched at a later stage. The lecturer's comment will also, sorry, I'm quickly looking at my notes, will tell you what kind of financial instruments that are not considered in terms of this chapter. In terms of the structure of statement of profit or loss and other comprehensive income, you are informed that for second year accounting, we will only deal with the following under other comprehensive income: revaluation, surpluses or deficit, or gains or losses on remeasuring equity instruments, which are financial asset measured through other comprehensive income. So one important part as well is when you are presenting your expenses, you can present them by nature or by function. And in terms of the comment from your lecturers, they say here, sorry, I'm just quickly looking for page 7. I don't know where I am missing this part that I just want to highlight. Sorry, I think I've moved on from that one. Yeah, sorry, we're still going there. We're still going there. Sorry, I was quick to go there. Information that is presented under your income and expenses. You are told here that the nature of and amount of all income expenses shall be disclosed separately if material. So you will have an item called profit before tax, where you will say under your profit before tax, the following as are items which are considered to be material. So it is inventory written down to net realizable value or the reversal thereof of the write downs, property, plant and equipment written down as well, and the others are provided. So you are also informed that in terms of this module, the expenses, income and expenditure can be classified by nature or by function. So you are requested for this module to classify income and expenses according to their function. So they are not their nature. And in terms of their nature, when you are disclosing note to profit before tax, this is what you will be disclosing: depreciation, amortization, and employee benefits expense is not involved. Remuneration of directors and prescribed officers requires an additional disclosure for you to please note. Statement of changes in equity. We will not deal with the non-controlling interest part, so you don't have to worry yourself about that one. So we'll be covering very limited part. Important for you to please note, dividends paid is an expenditure, but it only applies to statement of changes in equity. It is not included in your statement of profit or loss and other comprehensive income. It is only applied on your statement of changes in equity. And then your statement of financial position, you guys follow, you know it. So that is just about it in terms of the financial statement. So the rest that is provided is the examples. And most importantly, there is example 5, which is a very nice example, always highlighted. Always highlighted each year. Sorry, I just missed it now. Right. Example 5, it's a nice comprehensive example on presentation of financial statements, but on the statement of changes in equity, something to take note of is the disclosure of dividend per share in the statement of changes in equity, or alternatively in the notes. So we are going to discuss as well how to build up these marks when you are doing the statement of changes in equity. So the next time that we are going to meet, please, you will note, I'm quickly trying to check. Okay, we do not have the feedback form. I just want to quickly put a link for the feedback form. So the feedback form, it's very important that you quickly, so if you go to your chat, you'll find the feedback form. Very important that you provide your feedback in terms of today's class. So I want to show you what we are going now to be covering on the next class. The rest of the next classes, we are going to work on. The next classes. If you can just give me a minute. All right, there was just a background noise that I just needed to deal with quickly. The next time that we are meeting and going forward, we are no more going to revisit the theory. What we are going to be doing more, and I really am asking you to take your time going through theory and catching up as well. So this is a 2016 paper. I'm going to be sharing it after the class. It was about multiple choice. So what we are going to be doing on this, it is question 2. Question two is 42 marks. It's 50 minutes. We are going to be covering this for the 2 hours that we are going to be meeting. The requirements is we are going to do statement of profit or loss and other comprehensive income in the annual financial statements of Zimbabwe. We are going to do profit before tax note. We are going to prepare the statement of changes in equity. So these are the 3 statements that we are going to be preparing. Please note, in terms of the requirement, we must show all calculations. The answer must comply with the requirements of international financial reporting standards. So this is the question that we are going to cover, question 2 of 2016 paper, and we are going to apply many learning units that we are still going to cover. But what is important is I want us to get the structure of the presentation of the financial statements. So quickly, what I'm going to quickly ask you to do for me on your side, it is to quickly highlight to me if you've got any questions that you have. Any questions on your side? All right, I have noted that you do not have questions on your side. Right, thanks for that, Sebastian. This question is not on the. This question is not on the prescribed textbook. This question that I'm going to be doing on the next class is on the question paper that was provided for the 2016 paper, and I am going to be sharing it after the class. So it was October-November 2016 question paper, and we are going to be attempting question 2 of that paper. So we are going to be preparing that paper, doing all the statements that are required. So I'll be sharing this quickly. So let me see. Yeah, I have to quickly share it after the class. I cannot share it now. Let me quickly see if I can quickly copy and paste it. Yeah, I cannot be able to quickly paste it, but I'll be doing so. I'll be putting it in terms of your notes, and I'll be sharing it as well, so you will have access to it from today. And we are going to be covering this. So if you can just hold for me, I just want to quickly look. I know that there was a clash on the for the next class. I just want to quickly confirm the facet class. I know that you will have a facet class this weekend. I just want to quickly look as to what's going to be happening on the 5th of September, so that we can be able to know as we go our separate ways, when are we going to be meeting again. So I'm just quickly looking at the facet classes.